Hey guys, and welcome to my weekly market update for the 18th of November 2008. Today we're going to cover how Halifax disappointed us by the disappearing 1.5% drop. The credit crisis is over, Forbes says. Oil prices fall on the fear of economies going into recession. A look back in time at when oil was $3 per barrel. Yep. Unemployment, the City Group losing 75,000 jobs worldwide. And then we're going to look at your identity for sale for £80. Okay, and we're going to look at the specific credit agencies that you can get hold of to stop that happening. Okay, so let's get started. Here we go. Alright, so first of all, Halifax disappoints with huge rise in margins on new tracker mortgages. And I was just going to read this one bit here. Yesterday, it reintroduced 2-year tracker deals for borrowers with a 25% deposit at a rate of 5.14% or 2.14% above the Bank of England's base rate. Halifax's best tracker a month ago was 1.04. Okay, so that's actually 1.1% better margin for them. Okay, which is equivalent to £93 on a £150,000 property per month. So it's a massive increase in their margin. Obviously, as an investor, 5.14 actually isn't a bad rate. It's a 2-year tracker, but yeah, the margin's still increasing there. And a lot of the banks are actually considering doing that. What they want to do is restock their coffers effectively, so they've got lots of money to either re-lend out or effectively increasing their profit. Which is what they're doing. Obviously, they've lost a lot of money in the previous 9 months or year, and now's the time to actually get some of that built back up, to stock their shareholders and things like that. Yeah, good or bad? Well, obviously, I always want the cheapest interest rate possible, and I've got some of these mortgages, so especially on the standard variable and trackers, I know how it feels. For buying, 5.14 actually isn't a bad rate. Mortgage cost averaging I always consider to be 6%, so but yeah, we'll see how they go, and we'll see what other banks are bringing out, because most other banks haven't released their figures yet. Okay, this one, credit crisis, the worst is over. Stephen Forbes, publisher of Forbes magazine, has come out and publicly said he thinks that the credit crisis is over, and that despite all the gloomy predictions and all that sort of stuff, that things are on the mend. Someone like that in a good position. And actually in a good position to see that the economic recovery is coming, and I think quite an optimist. Okay. All right. Oil prices fall on economic fears or economy fears. Oil prices have fallen because of more bad economic news. Now, what we're seeing is most of the newspapers, and in fact, it was amazing this week. I get the newspapers every morning. It was actually quite boring, and that's the first time when it comes to property news, and that's the first time in a long time. And the reason was because most commentators are seeing the credit crisis is over, mainly because the banks and also the central governments around the world are actually doing whatever they need to keep the banks afloat. So credit crisis is over, not entirely over. I think come the new year we'll see an end to it. But what's now showing and rearing its rosy head is the recession. All right, but obviously oil prices are falling because of the recessions that are happening around the world. And just a bit of a lighter side of everything, if we look back to on this day, the 15th of December, okay, back in 1973, oil prices went from $3 to $11, which is a massive jump. But if you think about now, they've been, they're around the $60 mark, they've been up to $100. So it's amazing how just something like oil has gone up in value, just as we've seen property prices, and in fact, everything through inflation, it goes up over time, and we've got to be aware of that. So 1973, that's 35 years ago, which was actually the year I was born, believe it or not. So yeah, moving on. Okay, so this is from Times. Citibank, London is firing 52,000 basically. They've got a plan to get rid of, and it's set the actual group 75,000. So it's a massive cut of people. The one thing, and look, I'm not even concerned about that as the news story. The main thing is whenever we go into a recession, you're going to find your big companies cutting back all of the fat. And when I say it's probably a bad thing to call it, but they're cutting back all of the employees they don't feel they need, they don't feel they're necessary, and effectively unemployment is going to rise. Now they're saying about 3 million people are unemployed, 60 million people in the country, so that's about 5%. That's actually not a massive unemployment rate. If you're getting up around the 10%, then then you can start to sort of worry. Obviously, if you're one of those people, then that's absolutely tragic for you. And what we should be all doing is actually looking at our own jobs and our own finances, and making sure that we're looking and making sure we're okay financially throughout this period, because it can last anywhere from probably a year up to about 3 years. Generally, that's a long sort of term, because most countries can't afford to have the recession going on for a long time. Okay, because remember, a recession is actually things are contracting, growth is contracting, which is not what any government wants. Okay. UK identity sold for 80 quid online. All right, internet fraudsters sell complete financial identities for just £80. Okay, now you don't want to be the victim of this. Now, I just thought I'd show you the credit reference agencies. The first one is Call Credit. This is a new kid on the block, but nonetheless, some great information contained in that. Very thorough. I actually enjoy their information the most, or I think they've got the most valuable information. And that's just callcredit.co.uk. You've got Experian. Now, this is one of the older ones. They're a worldwide company, very large. All of these services, and if you go back, you'll see, protect yourself against ID fraud, get ID fraud alerts. Okay, so they all offer these ID services. Okay, and you'll see this is the credit report. But then if you go down, consumer advice, your score, there'll be something in there about there we go, identity fraud protection. All right. Then finally, you've got Equifax. Okay, Equifax, same thing, credit watch here, they've got this one. And what it means is they'll look after anything happens, there's something applied for, a new account opened, a balance changing massively, they'll remind you. And I get SMSs all the time from these companies, because obviously I'm subscribed to them. Now, one of the other ones that I suggest, and I quite like now, because of the interpretation of the data. See, the other three will give you the data, but it's up to you to do something with it. These guys, check my file. They've got a great website. It's actually action-packed and full of stuff. The other thing is rather than having to subscribe to 3 different websites and paying 3 different subscription fees, all you do here, see all your credit reports from 3 agencies in the same easy to compare format. Okay, for 19 quid, and I think it's unlimited access, 11 quid per quarter. So it actually works really well. It has other things like a free postcode check, so you can chuck your postcode in there. And it will come and tell you about your postcode. Okay, so actually, it's 19 hours. All right, sorry about that. Okay, so that about does it for today. I want to thank you again, and we'll see you next week.